Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
All right, welcome in. Joe Caccera, Real Estate Radio Live. Thank you for those that are viewing us on Facebook. It looks like it's one of those days where Facebook is connected and we're good to go. Maybe there's not enough Zoom volume going on here in the afternoon, so we're getting a lot of connectivity here. And as we always try to do, I always try to connect once a week with Jack Russo, so he's on line with us here. Jack, good to have you back. How you doing?
It's really good to be back, Joe. I have to say, I had planned to drive over and take you out to lunch, but apparently I'm just not 100% according to my wife. So she said, don't get Joe sick. I don't think I have. I'm pretty sure I don't have COVID, but I was sneezing this morning. And of course, you can't cough without someone saying, is that a dry cough or is that a wet cough? And there are all sorts of other signs that you should keep track of, including whether you lose a sense of smell. I've got a great sense of smell. I walked into this. You love this story. I got to tell this story. It's true. So I was riding my bike home from work because part of what I do is I still go to the office because I'm the mailroom guy now. So I ride my bike from my home to my office. I got an old 3-speed Raleigh English racer. It's probably worth something. I bought it used. It's a beautiful old used bike. It's probably like 40 years old. The tires are new. That's about the only thing that's new on it. I ride the bike. I get to the office. I spend the full day in the office. I go through the mail. I do all the things you have to do. As I'm passing on the way home, there's a guy holding a yard sale.
Really?
And no one's at the yard sale.
No kidding.
He's closing down his hotel that has been open for like 70 years in Palo Alto. It was the original Stanford Inn on El Camino.
Okay.
I said, why are you closing the hotel? He said, no one's here. He said, no one's here.
Yeah.
So I said, what are you doing? He said, I'm closing the hotel. I'm selling everything. He had artwork going back to like the 1950s. For peanuts. But here's the part of the story. I show up, it's got all this stuff out in the parking lot. I show up, this is completely unsolicited, completely just, I'm passing about the bike. I said, I smell gas. The guy's like, you're kidding me. I said, no, I smell gas. He said, well, he's an old man. This guy's old. I mean, I'm old, but I mean, he was really old. I mean, he's like old almost to the point of having one of those strollers in front of him. Yeah. Boy, I hope he doesn't listen. He's going to say, man, you shouldn't be talking about me that way. I said, I smell gas. He said, well, would you walk with me? And we went through every room, and I found the room that the water heater pilot was off.
Wow, look at you. You're a crusader.
I said to him, I saved your hotel from burning down. He said, I'd probably rather have it burned down.
That's a great story. I like that. That's a great story. Good story.
He didn't say that, but he said to me, man, do you have a good schnozola? I said, yeah, I can smell things. I mean, I actually do have a great sense of smell. So if I lose a sense of smell, if I lose it even partially, then I will know that I'm in trouble.
Yeah.
That's how you know you lose your sense of smell.
I love that story. You always got the good stories, Jack. That's another good one. So we're going to.
Well, this guy, by the way, said to me, he said, that was a new water heater I put in that room. I can't believe it wasn't working. I said, well, what are you going to do? He said, I don't know. I'm going to probably just sell the thing out to some developer that'll knock the whole friggin' thing down. Because that's what's happening on El Camino now. Everything's getting knocked down. All new stuff is going up.
Hard to believe. Well, today we're going to talk about big banks and how they're behaving and reacting in a crisis, which is interesting. My background, a lot of the last 20 years has been banking and residential financing. So we're going to have a lot to talk about here. A little bit too, in relationship of, maybe how they're reacting now versus the 2008 kind of mortgage meltdown. I know it's a little bit different. There's some different aspects to it and some components to it, but I certainly have my ideas of what's going on. They were bailed out, if you remember, right? Back then, I think it was Paulson at the time. He was sitting right. He was meeting with these executives, writing checks, right, for billions of dollars to bail them out.
Right. That's right. And what we want to do is we probably want to draw some parallels, because there's a great film called The Big Failure.
I know what you're talking about. It was the Big Short.
The Big Short is worth watching again.
Yeah, really good. Yeah.
The Big Short is worth watching again because it does tend to show the parallels. It tends to show that the parallels exist. It's not an exact parallel, but there's like a slow moving train derailment in process, and all of the banks are like cars on the train. Mm-hmm. And they're trying to see if the locomotive in front, which is kind of the Fed, is going to drive the train a little faster or a little slower, because the train's been going pretty fast. Yeah. These rates have been pretty low. Yeah. There's been a lot of juice put on this economy. Mm-hmm. And now you have this event, and the juice just keeps getting put on the economy. I mean, it's not like the juice has lifted. It's not like the rates have gone up. But you know that there are people that are in the caboose of this train that see the caboose kind of waggling back and forth as the train goes around the track, and the caboose is getting dragged. And the smaller banks in particular are worried about whipsaw. They're worried about, we're going to get thrown off this train first, because we're the smaller cars in the back that, we don't exactly get the first class treatment on this train. We get treated a different way.
And then the other element that you have right now, Jack, to add to it, is that on the back end, a lot of people don't realize this. So I'll say too, on the back end, you have a lot of these lenders, major lenders, B of A, Wells, and Chase, that are taking part of the program that's really helping to support small business during this crisis. So they're facilitating these loans. Now, granted, those loans are facilitated and guaranteed by the government. So that's a little bit different. But then on the other backside that a lot of people may or may not realize is these lenders are now offering, in somewhere in the neighborhood of, last I saw was maybe 7 or 8, maybe close to 10 million forbearances that are taking place right now.
Right. They're really being forced by circumstances, including a judicial system that is on hold. Both the federal and state judicial system is on hold. So there ain't going to be any real movement in any of the cases for a while, because the judges are just getting caught up on the criminal side. So we've got all these interlocking pieces of the puzzle that are all in disarray right now. And the reason I thought it would be important, because we've covered, too small to fail, because family keeps the thing alive. They take no salary. They, eat beans. They move into smaller quarters. They do a million different, they take renters. They take boarders. They start planting their own garden. They just take care of themselves. Too big to fail maybe includes some of the banks. Probably won't include all the banks. And then in the middle, we said caught in the middle. That was the last show we did. Right. The guys that get hurt in the middle are often the guys that are relying on the banks that decide to react.
Right.
Hey, you're in the middle. I'm not sure. You're not too small. We probably wouldn't loan to you anyway because you're too small. You're not too big, and those lines of credit are in, or the bonds have been granted, and people have been able to get the money they've been able to get, including from the government. But all the banks that are supporting the middle market, they become very suspicious of, are you managing your company well? So what do you start seeing happen? Let me give you some examples. And I've had different clients say this, and I've also experienced this myself in my firm. We've been around for 4 decades. We're a good credit. We have never stiffed anyone in our entire careers, our entire lives. Never a bankruptcy, never nothing, right? The banks start to look at your credit file, and if you have any of these services that give you a notification, they'll say some bank just looked at your credit file.
Right.
And they'll give you an alert. Well, why are they doing that? Well, probably you have a line of credit with them, and they're curious, what's going on? What's happening? You know, we don't see as many deposits anymore, or we don't see as many withdrawals, or we're not seeing activity. Right. Things look like they're slowing down, because remember, they have access to information based on your deposit history. So if they're seeing different deposits come in at different rates, that's an early indicator to them.
Right.
It's a little bit like what I like to say is, you know when you know that there's a recession about to happen?
What's that?
You can see an increase in the advertising of people selling second and third cars that they don't use.
Wow.
You can see people get rid of their vacation properties.
Okay.
All of a sudden, there's like the average inventory, say at Stinson Beach, is like 5 houses. All of a sudden, there's 20 houses on the market.
Yeah.
How did it become 20 houses on the market? Somebody said, honey, we can't afford the vacation house. We can't afford to pay the mortgage on it. We can't afford to pay the insurance on it. We can't afford to pay the property taxes on it. We got to get rid of it before everyone hits the exit at the same time. And you see the graph increasing. You know the other way you see it? If you look at the notices of default that get filed with the Superior Court on the original notice of default. The original, because in California, we're a trust deed state. We're not a mortgage state.
Right.
The banks pay attention to that data.
Right.
The banks buy that data. The banks pay services for giving that data. It's sort of like on their dashboard.
Yeah.
Hey, the notice of default in Santa Clara County, I don't know what the numbers are, but I bet on average there are like 50 to 100 houses that are getting a notice of default. You know, the 90-day notice that says, you know, in 90 days we'll do a bunch of stuff, Maybe it's 30 days now. At one point it was 90. It might be 60 or 30 now. Whatever that amount of time is. All of a sudden that goes to 200. All of a sudden that goes to 500. It's like the virus curve. It's just like that exponential curve. Different people start to say, wait a minute, I don't think I can afford this. I'm getting laid off. I only have part-time work now. I'm not getting the bonus this year that I thought I was getting. I'm not able to do the side gig with Uber because no one's ordering Uber. I can't even do the side hustle that I might want to do. We don't need that second or third car for the side hustle. So you start seeing all these other factors play in. The banks see it first.
So if you're banks, how should they, you know, the question is, people have different opinions on this and different views, but how should the banks be behaving and reacting right now? Would they go into defensive mode where they start reviewing credit lines? We've already seen, Jack, Wells Fargo, Chase, many others say no more equity lines, we're closing. So they're taking risk off the table. So as they're taking risk off the table, one side of the bank, or one side of the equation, or I guess the camp, let's call it camp, one side of the camp would say, hey, wait a minute, in a time where you should be really helping people in a time of need, you shouldn't be tightening the screws. And then there's another side of the camp that says, no, they need to tighten the screws, otherwise they could get in trouble themselves. What are your thoughts about that?
Yeah, think of it this way, Joe. The traditional banking, when I was a kid, the traditional banking was you had something called a passbook.
Yeah, I remember that. Yeah.
It looked like a Visa. It looked like the way you carry your paper Visa. Of course, now even the Visas become electronic.
I forgot all about that.
You would bring the book into the bank.
Yeah.
And the book would be, here's my passbook. I'm giving you $10 to deposit.
Stamp it.
They're going to keep track of that account. That passbook represents money. It's like a form of, don't give that passbook to someone else. But they knew who you were. You know your customer. They knew you. They knew your face wasn't even on that passbook, but it might as well have been on that passbook.
Right.
Then they went to Face ID on the passbook. Then they went to Face ID on a card. And now they've gone to kind of an electronic strip with a PIN code. That is not even a Face ID, although there are a few banks that actually still do Face ID. But the banks don't know you anymore at a personal level.
Right.
Because they treat you like a number. So it's all about what are your numbers. It's not about, oh, I know Jack. He's an honest kid. He goes to church every day. He's an altar boy. He's a nice kid. He does pro bono stuff. Oh, he's a nice lawyer. Oh, he's been around forever. Oh, I know him. He would never do that. That's not the way they treat you. They treat you as, are you in a pool where your numbers are north of 750?
Yeah.
Or are you in a pool where your numbers are below 650 or 660 or whatever the magic is that shifts from top class A credit to, B credit to C credit.
Right.
I'm just using, simple math here because they would say, oh, it's more refined than that. It's, it's not just a number, but the truth is it tends to be a string of numbers. It tends to be the numbers plus your education, plus your earnings history, plus your initial deposit when you open the account. If you can open an account with an initial deposit of $1 million, trust me, they're going to treat you way different than if you open an account with an initial deposit of $1 or $2.
That's right.
I don't even think they would take that. I think the initial deposit probably has to be at least 100. But if you put big money down as the initial deposit, let me tell you something. They totally classify you differently, even if a day later. In fact, the banker came to me last week and said, do you want to replace, I don't know how he found the data. He said, do you want to replace your 4% mortgage on your main residence? He had the data. I said, well, what could you do? He says, I can do, get this, Joe, you're going to love this. I can do, how do you feel about it? It's almost like he's negotiating. How do you feel about 2.95? I said, no, not good enough. He said, well, how much can you put in the bank? I said, I don't know. How much do you need? He said, the best I've ever seen, he actually says to me, he said, the best of my entire life I've ever seen, and recently, is 2.5% on 15-year paper, $3 million worth of loan against, super jumbo loan, but you have to put in $2 million as your initial deposit. And I said, how long do you have to keep the money there? He said, I don't know, he said a couple of days.
That's it?
He said a couple of days.
Wow, I'd do that.
He said, exactly. He said to me, put it in. He said, put it in, close the loan, take it out.
That's
I said,
amazing.
Doesn't that seem odd? He said, I get the same commission either way. He's like the bank. This is completely coin operated, Joe.
Wow.
It's completely coin operated. It's not like, well, are you going to be my banking client forever? It's like, hey, we're just trying to get some deposits. Hopefully you like our service. We understand if you don't, and we'll write the paper because if you got that kind of money, we probably believe that you are a millionaire and you'll take care of it. You'll take care of this debt. Plus your house is worth, 4X, whatever whatever we're going to loan anyway. So we're okay.
That's amazing, especially if you could take it out right away. I know there's some of those programs that incent people for better rates, but you got to keep it for a while. That's amazing.
Right. So if you think about this, what's really going on in the background? The banks are all competing for the better, bigger customers.
Right.
But they're also very leery that those customers can fall or falter.
Right.
So they know there have been stories where really substantial people do falter. Yeah. So they're looking at as much data as they can get to try to figure out what should we do? How should we do it? Should we do one thing? Should we do another thing? They want to have a lot of optionality because they don't know what's happening in the current market. It is foggy. I mean, I had the background up of the fog when we first started today, testing the equipment. I had the background of the Golden Gate Bridge up, and you said, man, that looks foggy. It was foggy. And it made me think it is accurate to say, I've taken the background down, it's a lot clearer, but
now it looks like you're in a church. You have cathedral ceilings there.
Exactly. It is a special place. Yeah, it is very, very special. But in truth, you have to say to yourself, what kind of relationship do you want to have with what banks, plural? That's what I like to say. If you're going to be in business, unless you really have a banker that's senior, that is old school, and these people, unfortunately, are retiring and going away. Right. Unless you really have a good, strong relationship with a senior banking officer, the truth is you cannot count on a bank anymore.
Right.
The way in which you used to be able to count on a bank.
Yeah, very true.
And you probably see it in your business. You deal with banks
all the time,
right?
See it all the time. I mean, they just, because of this COVID-19, they've just tightened all regulations, and it's amazing. If you don't have at least a 700 credit score, you are severely penalized with financing rights. Severely. I mean, the difference in rate, if you have a 699 credit score versus a 700, seriously, the difference in rate is almost 1.5% difference. It could go from 3.5 to 4.5. It's crazy.
Yeah, I mean, what do you think happens to someone that files for personal bankruptcy? What do you think happens to their credit score, and what do you think happens to their their ability to borrow at all? At all.
Terrible. I mean, it's
terrible, right? Yeah. They become classified as someone that cannot be trusted to manage their own affairs.
Right.
They're classified as, you should have figured out a way to avoid bankruptcy. Bankruptcy is the ultimate financial lobotomy.
Right.
Bankruptcy represents you could not manage your own affairs. A business bankruptcy, perhaps, is, man, you took a lot of risk. Donald Trump, you were trying to run an airline. What? You don't know anything about airlines. Why were you trying to run an airline? Hey, man, I thought airlines were complementary to getting people to my Taj Mahal. Your damn Taj Mahal's in bankruptcy too. What made you ever think that you could play the dice and do an Atlantic City casino? Well, I thought that, plus having a football team. The football team went into bankruptcy. I mean, Donald Trump, president of the United States, has never been in a personal bankruptcy, but he's had multiple entities that he was in control of be in bankruptcy, and we still voted for him as president. We still, I mean, I said it's amazing to me, because if that guy were actually applying to be CEO of a public company, they'd say, no way, no way. We can't let this guy do it. He's failed too often. And people look around and say, no, you're just being too critical. I say, when's the last time you talked to someone that's been through as many bankruptcies through his businesses, and you haven't said, do you have an explanation for what goes on? And I think he'd say, man, I got bad advice by a bunch of accountants and lawyers and business consultants, right? I mean, what else do you think he would say realistically?
Oh, he'd never say. Yeah, he'd never take responsibility himself. Of course not.
I mean, somewhere in this, he probably would say something like, look, the banks have been too hard on me. But I think there's video where he says, if you get into trouble, the bank's just like loaning you more money. It's the bank's fault. They get drunk on risk. It's a little bit like, why blame me? It's the banks that keep throwing money at me, and I just happen to say yes. Because if you're in trouble, what's the first instinct of the bank? If I can get a bigger security position ahead of the other creditors, I'll do that. And so the banks treat it like a game. Well, maybe I could jump ahead of the next person. And if I could jump ahead of the next person, maybe I'll be better off, right? I mean, it's a funny thing, right?
It is. Yeah, it's a funny thing. It'll be interesting to see. I mean, it is a dilemma when you think about it. I could see both sides of it. I could see the side where the consumer and the one camp, again, saying, wait a minute, my taxpayers, my tax dollars bailed your ass out, bailed you guys out in 2008, right? A consumer could take that position. We bailed you out when you needed money. I could see that side, but I could also see the side and say, wait a minute, do we want to collapse in the banking industry? Do we want this holy forgiveness being given to everybody, and that will create a collapse?
Yeah, so you'll have aggressive banks that sometimes will get a little bit too aggressive, and people will say, man, the persons that manage that bank were not very smart. And then there are a lot of conservative banks that, they'll get really conservative, and they'll turn around and they'll say, we just can't loan any more money to you. And then if you have another relationship and you move all the accounts over, they get upset that, well, you haven't been loyal to us. And you have to say, you haven't been loyal to me. Yeah. You caused that to happen. I had to move because there was no choice.
Right.
That's what you did.
Right.
So when you think about Joe in your own business, let me ask you, when you think about banks, you're essentially in a business where you intermediate with banks.
Right.
You're the front line. You're assessing the credit. You're doing due diligence. You're trying to figure out if people are being honest and truthful. You're right there. The banks will often look to you to say, what do you think? But do they always take what you think is gospel, or do they say, well, the numbers don't just add up, Joe, we can't do it. We can't do the deal you want to do?
No, they rely on us. They basically to be, let's say, the conduit, as you mentioned, or the firewall to really allow. In other words, we wouldn't review a file or send it to a lender or investor unless we thought it was worthwhile. Now, of course, there's what's called, there used to be more until recently, but what's called like non-QM, what used to be called alt A or subprime. In other words, things that just don't meet the kind of conventional criteria. So then it goes to another subset of investors that will consider the file, but you're going to pay a higher interest rate or pay some additional fees for that risk. And so that's what we do. But I have to tell you, the stuff that we have anything that our team or anything that gets submitted, we've got like a 98, 99% close rate. So in other words, we're not going to put anything in if we just think there's a chance. It has to have a solid chance of going. Otherwise, you waste a lot of people's time and energy and effort.
So do you say to yourself, if someone comes in and says, yeah, I've had a recent bankruptcy, do you say, I can't spend any time with that client because I'm very likely not going to be able to find the loan for them because their credit score is probably down in the 600s, low 600s, maybe even 500s. And they've got a big a demerit. It's not 7 years old. When does it get washed out? 7 years from now?
5 to 7 years. It depends on if it's FHA or what kind of financing. But typically, if that happens, I would spend some time with them, really educating them and informing them on how they could clean things up or next steps or expectations. I might, they may work with a credit bureau. I have some suggestions of what to do. And if they really, really need money, then, it could be out there, but it's going to be awfully expensive. So we typically wouldn't say, just turn around and hit the door. We would give them some advice and maybe give some encouragement of what they could do maybe in the future if they put a plan of action in place.
I mean, doesn't it really end up being like twice the rate at least? So if the current rate is 4, wouldn't it be more like 8 or 12%? I mean, this is like a subprime loan. I mean, this is like the worst credit people that are in the market, right?
Yeah, for something like that, if they're going to get money at all, it would be what most people refer to as hard money, private money. Certainly, it would be somewhere between probably 8 and 12%. Yeah, my guess is, and additional points and fees associated with it, which could be pretty expensive depending how bad they want the money. We will see.
I mean, don't you say to yourself, gosh, people that pull the trigger on a bankruptcy, they're really taking risk here that really does create a financial lobotomy. That's what I say. Do you use a different term for it? Is that just not politically correct to call it a financial lobotomy? What do you call it?
Probably not. I would just say maybe a learning experience or a bump in the road.
An expensive learning experience, kind of like a divorce. Well,
I would have a tendency to, I'm not a judgmental person, so I would have a tendency to probably tell them, hey, things happen. It's beyond your control. Listen, don't feel bad about it, but here's some things you could potentially do. But it's going to take 5 to 7 years for this to heal, and here's some steps to take. But I mean, it's a risk. Let's face it. Lending and business specific lending we're talking about today, as we're talking, the question is, how are they reacting and how are they behaving in a crisis? It gets tighter. And what I'm seeing is the lenders that we're working with and investors we're working with, they are taking every conceivable risk off the table now they can without really pulling completely out of the market. Does that make sense? So They're really tightening the screws, which means higher credit scores, shrinking the loan to value. I'll give you an example. A big one was a while back. A lot of these investors would say, listen, we'll allow a combined loan to value of 90%, so you could bring in a second, subordinating second or third or whatever. We're happy being in first position, but we'll allow this to go to 90. Well, that went away. Now no one's allowing anything to go over 80. I'll tell you the other thing that's happening, it's hard for me to believe, but a lot of lenders aren't allowing cash out anymore. Can you imagine that? No cash out. Jumbo, typically jumbo financing. So this is crazy, Jack. You go to them with an excellent credit rating, right? Let's say your house is worth $8 million and you say, listen, you own it free and clear and you want a couple million out, which is really no risk, very minimal risk, right?
Right.
There right now, today, as you and I do this show, there may not be anyone in the market right now that would give a great credit risk $2 million cash out on a property worth $8 million. That's nuts to me. That's crazy.
But if the cash that's coming out is demonstrably paying off other debt, shouldn't they be doing that deal? Because the debt is being paid off. If the debt, like if you condition the payoff on, you have to pay other debt. Like I would not understand the lender. You say everything you just said, but add to it, Mr. Lender, I commit to you out of escrow. So you'll see the money transfer. All the credit cards are being paid. All the second trust deeds are being paid. All the other debt that I have, all the medical debt. I mean, what's the reason most people file for bankruptcy? Usually it's medical debt. Usually that's the big problem, or credit card debt.
Right.
They kind of lose control. The credit card rates get really high. I mean, that's the part that really hurts on the credit card side. And so you could say it's a little bit like selling alcohol. People who use it wisely have a good time. And then there's the rest of the world. And the rest of the world causes accidents and suicides and broken marriages and criminal acts and all sorts of stuff. But it's not the alcohol doing it, it's the person that's doing it.
Right.
They're not taking financial responsibility. It's a little bit like we talk about people taking care of themselves medically. You don't take care of yourself medically, guess what? You're probably going to have medical problems.
Right.
I mean, part of what's wrong in this country, don't let me get on the soapbox, is that people don't eat wisely, including myself. I mean, we all are tending to enjoy the food that's so readily available. Of course, now most of the restaurants are closing, so we're actually now on good diets. I've lost a bunch of weight since I've last seen you.
Good for
There's
you.
no restaurants to go to. I swear.
I'm blaming it on the restaurants now.
I swear, you know, if you eat at home and you have someone that cooks vegan, I said to Lee, I took my belt off. I said to Lee, I've been punching an additional hole in this belt. I'm going to take it off just to show you. I've been punching additional holes in this belt.
Look at that.
No, seriously. And she said, well, let me just get you a new belt. I said, no, I'm going to keep punching holes until it gets it. It's pretty funny, but it's true. I think it's really true. And it is a statement.
Yeah, no, it's very true. And, you know, yeah, we don't want to go in a different direction, but it's been proven people on these plant-based diets, what it does to your weight and your cholesterol and your blood and all that kind of stuff. So your wife's on to something. She's just trying to convert you now. So do you have
she's doing it. She's converting me, and I think it's a good thing. I think it really is a good thing.
So let me ask you this. Is there any beef or any steak in your house to be found right now?
No.
No? Really?
Zero.
No kidding. Really?
Yes, zero.
Wow. How about chicken or fish?
Zero.
Whoa.
Zero.
Wow.
Zero.
No kidding. So, so Jack Russo won't every once in a while throw a steak on the grill?
We don't even have gas in the grill. We don't even have gas in the grill to throw it on. We don't even have the actual gas in the grill, Joe. I mean, it's kind of a statement in a way. It really is a statement.
Well, actually, your wife's trying to preserve and put some extra years on your life. You got to give her credit for that.
I give her a lot of credit. I do think if diet in America changed, and if this pandemic causes a increase in health literacy because people are more aware of how important it is not to get sick, we will have done a good thing for the long run of this country if we increase health literacy, change diet, and of course increase exercise. That's interesting because a lot of people don't want to go out to exercise. So I don't think that's really increased, but some people say it has increased indoors. And Peloton, the company that makes those computer-based, I call it I call it porn-based computer bicycles, because if you ever go on it, it's like this beautiful woman with this beautiful tight outfit on and say, "Come on, baby, Joy, come with me, baby, come with me, come on, pedal up." It's boring.
I need one of those mute buttons like I used to have on live radio, so I can mute every once in a while.
You'd have to mute me out. You'd have to mute me out for sure. That's for sure.
We gotta wrap things up. So I'm sure you have kind of an ending step, but I would say that my message to those listening to the podcast is that, be very careful. If you need money, there's money out there. You just have to be careful who you're working with. There's people right now that will take advantage of you, so you have to be really careful of that. You also have to really determine what the best strategy is, because there's a lot of people that are out of jobs. There's a lot of people that are going into debt. And so I would say, the message I would give to a lot of people, because a lot of people, unfortunately, when they start struggling, and not to become this psychiatrist, Dr. Phil, but, a lot of times they'll withdraw and they won't reach out for help. And I would say, reach out to help to people you respect, people you trust, and get some advice, because you don't want to bury yourself and get stuck in such a deep hole that you can't come out of it. And that's the advice I would give. And otherwise, on the bright side, money's never been cheaper. So if you're in a position to afford a home, a purchase, a refinance, get out there and take advantage of it. That would be my advice.
Well, you would say money has never been cheaper, and the price of real estate is coming down.
True.
So grab the cheap money while the price is coming down, and don't worry so much, because in the long run, real estate has always had the ability to recover. Right. It has always been able in the long run. It may be a long run, but even 10 years ago, if you invested at the bottom of the 08 market, you would be fine. You'd be fine today, 10, 12, 15 years later. But let me say, in my opinion, there's 7 numbers. I'm just going to give you 3 that you can think about, and then we'll cover the other 4. And I think of it as part of this whole 7 Essences series that we've done in one of the early podcasts. But I think, first of all, you got to keep track of your health and your health literacy. There's 2 numbers. You want your blood pressure number, and you should learn how to do your own blood pressure. That's the other thing I learned during this pandemic. Do your own blood pressure. Get yourself a good blood pressure machine. I actually have one at the office, because when I see clients and they're in distress, I say, "Do you mind if I take your blood pressure?" They look at me like I'm nuts. I said, "You've come to me because you're really stressed. If your blood pressure is out of the normal range, guess what? This case, this dispute, this fight, this litigation, it's killing you."
Wow.
And the second thing is your cholesterol numbers. I'm sure there's other numbers too. And then the third thing, and we're just going to do 3, is you do have to keep track of your credit score.
Yeah, you do.
And you should get one of these alerts, whether it's through Credit Karma or whatever the one you want to use. There's a lot of free ones out there that'll give you your credit report for free once a year. And set the alerts so that you know whether your credit score is changing, because it could be someone's committed some form of identity theft or fraud and is misusing your credit. We'll leave for another show the other 4 numbers, but those are 3 numbers: your blood pressure, your cholesterol score, and what some people call your FICO score, your credit score, essentially your score on your financial health. The actual health, medical health, is much more important than financial, but financial becomes pretty important too. And one can affect the other, no question about it.
Well, before we cut out, remind everybody how to reach you. Jack Russo, you got a lot of legal help there. There's a lot of people that are going to be needing your assistance. I could feel it coming. Yeah,
well, we get calls all the time, so I actually pick up the phone. People are amazed. We still have a receptionist. The receptionist does locate me wherever I am. Jack Russo, managing partner of Computer Law Group, 650-327-9800. We've got an 800 number as well, but I don't remember that off the top of my head. I'm sure it's on the website. The website is www.computerlaw, one word, computerlaw.com. And of course, email jack@computerlaw.com works just fine too.
That's very good.
It's all good. Any which way you want to reach me, I'm happy to respond. And of course, we're on Facebook as well.
Yeah, and Jack and his firm's on our website, and I've said it before, but it doesn't mean, I fully endorse Jack and his company. I've known Jack for over 20 years. We've done a lot of work together, and there's people in business you want to be able to, when you get into make some of these decisions, you need to be able to trust them and know that they have your best interest, and that's what he and his firm will do. So reach out to them if you need anything, and Jack will look to do another show next week.
Yeah, we'll uncover the other four, or maybe we'll uncover, like a striptease, one number at a time. We'll cover 4 different shows, so people have to listen to all the shows to get all 7 numbers.
Yeah. All right. Sounds good. All right. You take care of yourself.
Thanks for having me.
Yeah. Take care.
Later. You too.
It's Joe Kuchera with Real Estate Radio Live. Thanks again for tuning in. We had Jack Russo with us today. For more information, you can always go to RERL-1721-Growing. That's RERL-1721-Growing. Take care. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.